Hey there, this is Stephen Kwitzel with the Trader's Plan. It is Friday, September the 16th. I'm going to cover a lot today on the general market, what's trending in the market. I have a lot of interesting facts about the VIX and what the market's potentially going to do as far as if history is a guide. So got a lot of conflicting information right here, but I want to show you something right now. So we have the Nasdaq Composite, right? And it's almost at an all-time high again. So we had a nice little uptrend, right? You had the Brexit, and I like to draw these boxes just to show you the trading ranges that markets can be in, right? And hit resistance and hit resistance. And I like to think uptrends in terms of boxes, right? It's in a box, breaks out of a box, it enters a new box, breaks out, enters a new box kind of thing. So when it breaks down, it can be bad. Now, this down here, this was the Brexit, and this was really a massive shakeout. And it shook me out. I didn't have that much money in anyways, but shook me out of my short. But let me show you something. So this is the Nasdaq versus the S&P 500. If this line is uptrending, it means the Nasdaq is outperforming the S&P 500. And it's really since Brexit, this has just been on a tear, which means money has really been flowing into aggressive technology stocks, which is surprising, but hey, this is happening, so you can't really ignore what is happening over the line, really since the Brexit, okay? So I have some really interesting facts for you. So the market right here, let me get my inspection on. The market on September the 9th, on a Thursday, actually I believe that was on Friday, last Friday, gapped down over 2% in above average volume, okay? So you can see this above average volume right here. This is the 50-day average volume that I track. So, right, not only was that an exit signal of my long on my trading system, that was also a short signal. I want to tell you, and I got stopped out on my short. So the long worked, the short didn't. But let me tell you something about this short signal. So the short signal for me is if the Nasdaq is trending along above its 20-day moving average. And I've tested a lot of different kind of short signals. And then all of a sudden it gaps down 2% or above, and it has to start above the 20-day. And it gaps down 2% and above in above average volume. That to me, that's kind of like a first crack in the dam, okay? So since January 1st, 2007, this has happened 24 times. Now, before this year, it was actually doing quite well. It had a 70% success rate to short at the open of the next day, and you had a 70% chance of the market going down at a minimum of 2% or greater. And if you were using leverage, you could have done a lot better. However, so it's happened 23 times since January 1st, 2007. The market's gapped down 2% or more and above average volume. Now, this year, we've had two signals that have happened, one right here and one right here, and they both got triggered out before you could get your 2+% gain. Now, what I found is out of 23, right, including the 2 years that the 2 times that haven't worked this year, so you have 8 out of 23 that have failed, or you can say 15 out of 23 that have been a successful short. All right, so 15 out of 23 have been a successful short. So you have 8 times the market would have just turned right back around and stopped you out, okay? So you have 8 failures. Out of those 8, only 2 of them would have turned back around and stopped you out and then would have rolled over, okay? So I'm going to repeat that. So out of 8 of 23, you had 8 failures out of 23, but out of that 8, only 2 would have cleared the high of that 2% day to stop you out, right, and then rolled over. So what this is telling me that 6 out of the 8 failures, when you get stopped out, the market, and I've looked at them, I've studied the failures, the market continues to want to go higher. So what that's telling me is only 10% of the times that this has happened since 2007, when you get stopped out, the market's just going to continue to take another leg lower pretty quickly. What this is telling me is the market, if my studies are correct, which they are, that doesn't mean that they're going to follow suit. But what this is telling me is the market will likely, has a 90% chance of likely grinding its way a little bit higher. Now, higher might be, it might slowly take out these highs, then roll over. But what kind of trend higher. But what that means is 90% of the time that this has happened, the market has continued to trend a little bit higher. So it's not an exact science. Obviously, this is a sample size since 2007, but a lot of times when you have this crack in the dam, right, and then the high of that bar is taken out, basically the market wants to move higher. Now, it still has to take out the all-time high, right, so we still have some tests. But what's happening today is the Dow Jones and the S&P and the New York Stock Exchange, they're down more than the Nasdaq and the Russell 2000. So what that's telling me is the Russell 2000 and the Nasdaq, the more aggressive indices, they're not down as much, right? That's positive for the bulls, right? So that's one check mark for the bulls. So I really wanted to show you that, give you a little bit of history lesson on the negative 2%, just to show you what is likely. And sometimes when that happens and it just turns around and goes higher, it really just means we could be re-entering another bull market, or at least another decent leg up. Doesn't always happen. So if we look at the weekly chart, I've been really drawing this long-term trading range. And a long time ago, I'd say this is a topping format, but the Nasdaq broke to all-time highs, and you have to respect that, right? So you can see it kind of eked its way above this, pulling back a little bit, but is really testing this. It's really testing this, and I want to kind of annotate this. Let me get these annotations off real quick. Whoops. Give me just a second. Delete. That's for some odd reason it's not. Delete all annotations. Yeah, there we go. Okay. So that'll kind of save all changes. Yes. Okay, so this is the weekly chart, but I mean, if you can see, and I like looking at the weekly chart because it just really kind of calms things down a little bit, because the daily is a little bit sloppy. But if you can see, you have this trading range, you have this massive upside reversal during the Brexit, a steady Freddy uptrend, and it's kind of creating a bull flag, right? I mean, if I were a betting man, I'd say it will probably take another leg up. I would be surprised if it completely rolls over from here, just because the sectors are acting right, the financials and the technologies are acting right. You got stopped out of a 2% down day. It means it just completely took out that bar and turned around and went higher. So I'm seeing more for the bulls than the bears, okay? But be cautious also. I don't know how much I'd be adding too much right here, just because you've already had this move right here. But I mean, you could enter, you never know when you're going to have another one of those 2013 years. So you need to make sure you always have something in, right? Because you could be wrong, wishing the market's going to go down. So let's look at the discretionary versus staples. You've probably seen this. Now, this is a little busy, but I do want to show you some things. So right here, the black and red, that is consumer discretionary stocks versus consumer staples. So when the line is going down, that means staples are outperforming discretionary. And when the line is going up, that means the more aggressive stocks are beating. So I have this vertical line right here because that shows me when the discretionary stocks topped. So really ever since, what day was this? Ever since July 27th, I'd say for the most part, consumer staples at least have won. But, this is kind of just trending sideways. I'd more call it, and that's why I drew a box around it, I'd more call this a trading range than just completely rolling over right here. So you can see at this point, the gold line, which is the S&P, continued to trend higher when the discretionary stocks were kind of underperforming the staples, means money was rotating, and then boom, you had this crack. So right here, I'd still say this is neutral because aggressive stocks discretionary stocks do have to take a breather. But technology, even though this is only discretionary, this isn't technology and this isn't financials. Technologies and financials have still outperformed. So if we look over here, kind of around the same time, the 50-day moving average, the percent of stocks above the 50-day in the New York Stock Exchange stocks, right? has been trending down a little bit for quite a while. So when the S&P is moving higher and the breadth is moving lower, sometimes, then all of a sudden you get this nasty crack, and maybe it resets, maybe it's the first crack in the dam, and you're like, yeah, that makes sense. But sometimes when you look, I like to look at breadth, and I like to look at sector rotation, because it paints me kind of a good picture. So when I see the market, like at this point, heading higher, but money is rotating into more consumer staples, it doesn't mean I'm going to go out and sell everything, but it means I'll probably hold off on new purchases to see what happens until this can start to perk back up. But you can see the Russell 2000 has really outperformed. This is the Russell 2000 versus the S&P 500. And if this line is trending up, it means it's outperforming the S&P 500. And if it's trending down, it means the S&P 500 is outperforming the Russell. For the most part, you can see it's kind of a steady line up. Now you can see the Russell has underperformed a little bit, but it's kind of perking up again. So the trend for the most part is up. Stocks don't go straight up. So I would really call what's happening right here kind of a neutral for the bull and the bears, because it doesn't seem like it's completely rolling over like it should. And especially with my data on the 2% down days, I'm kind of thinking we might try to take another leg up. So I want to look at the VIX. I did a webinar on the VIX several months ago, probably late spring. But I looked at the VIX and I was like, okay, what happens? So this is kind of where it gets a little bit conflicting. So I'm like, what happens when the VIX, you get these spikes in the VIX? Now all these vertical lines, right, these blue vertical lines, what that is the initial spike above 20 in the VIX. So what happens after that initial spike in the VIX, that fear gauge? What happens to the overall market? So you can see right here, I have 1, 2, 3, 4, 5, 6 data points. So I have in the last, I would say 2 years. So I have 6 areas of sample. So right here, back in October of 2014, the VIX spiked above 20. It wasn't the bottom, and it continued to roll over. Same thing in late 2014, the VIX spiked above 20 initially, and then it continued to go down probably about 3-4% right here, and probably about 3-4% right here. So nothing huge, but that spike wasn't the bottom. Here's where it gets interesting. You have a spike above 20 right here, and this is the S&P 500. So you have a low put in, and then the market tries to come back, and then it rolls over, okay? So same thing happened right here. You have a short-term low. The market tries to spike in the VIX. The market tries to come back, and then it rolls over. Right here, you have this spike in the VIX. You can see the market tries to come back, rolls over, and then you have the Brexit, and then it takes off. Now we're kind of waiting to see what happens right here. So I believe when I say the market might take another leg up, the market probably will take another leg up, or at least test the all-time highs, right? I don't think it's just going to continue to go down, down, down from here. But what the VIX is telling me, based on all of these other data points, what the VIX is telling me is that that fear hits in, the market gets oversold, we can see a bounce before we get a better correction. So typically that initial 20, that's just kind of the short-term bounce. I don't know if I'd see those as a buying opportunity, but based on what's happened the last 3 times, at least, the minute that VIX hit 20, you get a turnaround and then a rollover. A turnaround and then a rollover. A turnaround and then a rollover. So I'm kind of waiting to see right here. We don't have enough data because we hit the VIX on last Friday. We just don't have enough data. But you can see the VIX is already back down to 15.85. So already down to 16, was at 20. So I'm just interested to see what the S&P 500 can do, because there are some other signs as far as sector rotation that are really telling me that the market won't roll over. And when I say roll over, it doesn't mean it's going to roll over, the big one. It could just be a 3 to 5% healthy correction, chop around sideways for a while. So we'll kind of wait and see. But I think it's important to look at history just to see what happens after the VIX hits 20, to show you that even though we're likely to take another leg up, it might not be too long-winded before it takes the better correction. So just really, I think this is good data right here. I really don't pay attention to the VIX on a daily basis, but when it gets above 20, it has my attention. And that's kind of how I see it. So let's look at some oil, right? You got Brent crude, light crude. So you had the bottom over here at 26 bucks a barrel, went all the way up to 52. It doubled, right, in a very short period of time from February to mid-June, pulled back. Now on the weekly, so this red line is the 200-day moving average. On the weekly chart, it found support at the 40-week, okay? So it found support, it reversed higher, and then it took another leg down, kind of tried to come back, took another leg down. It kind of does look like a little rounded top. So right now, I'm really waiting on a couple things. I'm waiting to see if it does. It's at 43, so oil would have to pull all the way about 10% to see if it tests this point right here. But I would think that even in this rounded top, I would think it would find support in the $39, $40 area, just because this pivot could be huge, could be a huge potential area of support for traders. And if it breaks that, I mean, you could look, then you got 35, then you could just have, here, I'm going to draw on something. You really could have just a waterfall effect where all these stops start to get run out. I'm not thinking that's going to happen, but just kind of wanting to show you what the potential is happening. We're about 10% above support in my opinion, but it's looking kind of toppy. The fact that, you know, it came back, it kind of formed a little bit of an ugly handle. So you can kind of see the cup, you can see the handle, and then it couldn't come up, and now it's forming another handle. So it's really, I'd say, instead of a cup with handle, now it's in this trading range. But again, you got a rounded top, so I'm kind of waiting to see. But I would expect that if oil pulls back, that might be a good opportunity to jump on some energy stocks for a longer term hold, because once oil gets to 65, 70, you've missed the boat, okay? So I'm just kind of keeping an eye on this, and because XLE, and we're going to look at that, XLE has been under some pressure lately because of, you know, oil, right? And we're going to kind of wait and see what happens. So let's go into, actually, let's look at some natural gas. Okay, that's not what I want to see. Since we're on oil, let's go ahead and look at UNG, okay? So if we kind of look at this, you have, actually, let me go back just a little bit, and I kind of want to draw some lines on this. Let's go back 1 year. Okay, so you have UNG has really been in a downtrend. Natural gas has been in a downtrend for quite some time. It was really in a nice little trading range right here, like it popped off the bottom, traded sideways, popped again. It's in another trading range, and it's funny how the support at the bottom of this trading range is the top at this trading range. So again, I like to draw boxes because stocks seem to stair step their way higher. So I'm looking at a lot of different commodities, and to me right now, this is really one of the main ones that I think continues to look interesting, just because of the long-term downtrend it's in, and it's starting to do things it hasn't done in a very long time. And you got the golden cross, right, the 50 over the 200-day. It's really looking like the trend's starting to change. I don't think natural gas or any commodities is a buy and hold play unless you're looking at precious metals. So you don't want to like set it and forget it or something like this. But this, I believe, will stair step its way higher. I don't know how long it's going to be in this trading range, but natural gas is looking really interesting to me. So let's go look at some sector summary. Okay, so utilities is up today. It's kind of a surprise the market's down. Let's look at what's happened the last week. So this is some conflicting information. You have technology is still at the top, but then utilities is right under it. And energy is at the bottom. You have this XLE. And let's look at XLE for a second, because in a way it's kind of mirroring oil, right? It keeps coming down and printing these candles down near its 200-day moving average. So if it gets down in here, I'd probably see that as a buying opportunity in a pullback, just because you have the golden cross that's happened and it keeps finding support in this area. So XLE is getting hammered this week, but is interesting. Technology is really something you need to pay attention to, because that has been extremely strong in the last month. You still have technology towards the top. Let's go look at technology for a second. Here's the interesting thing. It's really, when you look at technology as a sector and then you break that down into industries, you have a lot of industries that really aren't doing so hot, even within the technologies. So sometimes you don't want to buy a blanket ETF on technologies. You want to see if you can buy something a little bit better if you can just break it down into subsectors, because that's where most all the strength is coming. Semiconductors and computer hardware. So you can really see over the last month, you've had some massive runs in the computer hardware sector. Apple's, I've been thinking that stock is going to roll over all year, and now all of a sudden it's breaking out, starting to have a comeback. 3D's looking like a turnaround story. A lot of these stocks are really just looking solid. So, you really need to start to pay attention to the computer hardware. Semiconductors, I've been looking at a lot of ETFs. I know Skyworks very well. I used to do pretty well with that stock, Cavium. So I know a lot of these semiconductors as well. But look, there's all green on the screen. And what that is telling me is the more I scroll down in all these semiconductor stocks, and you have some down here that aren't doing so hot, but there's more green than not. There's broad participation in semiconductors. So something, if you're looking for an area of focus or an area to buy on a pullback, or really you're looking for to buy the strongest stock in the strongest sector, semiconductors is incredibly strong right now, and it's something you would want to consider researching more. Now let's go back down to here. So financials is something I want to pay attention to. I've been thinking financials really should be doing well for quite some time now with the rise of interest rates. So when interest rates rise, and I've been saying this for years, but when interest rates rise, obviously utilities, REITs and maybe some other things will fall, but it should do very well for banks, mortgage lenders, insurance companies that are very interest rate sensitive and then do well in a higher interest rate environment. So when I'm looking for area of opportunities for probably the next 1 to 3 years, I probably see financials as the biggest opportunity. Let's look at this for a second. So let me look at a weekly chart. So you can see financials, now this is the XLF ETF. Financials really hasn't even, it almost hit the all-time high, but it's still kind of struggling a little bit. But it had a nice uptrend with the overall market. But we're going to peek under the hood because there's a lot of financials in here. I want to peek under the hood just a little bit, and let's go look at some industries. So in the last 1 month, right, look at all these REITs towards the bottoms. Hotel, REITs. The more defensive are all towards the bottom. So something like this bodes good for the stock market, because that means that the more conservative stocks are being sold off, the more aggressive stocks are being bought. But you have life insurers, right? They hold a lot of bonds and very interest rate sensitive. So something the rising interest rates would really help. Investment services, mortgage lenders. Let's kind of see what's happened in the last week. So in the last week, we kind of had a flat market, but you can see real estate services, residential's reached up there, but insurance brokers, financial administration. So if we go back and look at the bigger picture, these are the industries that are probably going to do the best in our next bull market. I don't think that a lot of times the big institutions, the big money, they try to get in way early. I don't think they have pushed this industry group up near where it probably should have been or should be, because what happens is a lot of times these sectors will go in favor 6 months to a year in advance before they're supposed to really do anything. Well, so far, financials are really just starting to come along, and so far, the financial sector's really been with the overall market or slightly underperformed. So what I'm saying is I think the institutions have a lot of room once they believe interest rates are truly going to rise to really push these groups up. So I think there's a lot of opportunities if you want to get ETFs or you want to dive down in some individual stocks. Genworth, just kind of MetLife. I think I saw something that MetLife was breaking out. So you got MetLife that has really been hitting resistance at the red line at the 200 week moving average, and then finally broke through the 20 days crossing the 200-day. Will we get that golden cross? But it's really kind of looking like it's trading sideways a little bit, going to base a little bit, but a lot of these insurance are looking very interesting. Let me go back. So here's an industry, I'm going to go to the energy. Here's an industry I do not believe in that's really got me scratching my head a little bit, and that's coal. I don't understand the move in coal, and I want to look at this chart just for a few minutes to kind of show you the monstrous move. Let me turn this into a weekly. Let me kind of get the moving averages right, just so you can really see what I'm seeing. So, oh, wait a minute, I did save a chart. Okay, so let's look at the coal index, just to show you how far it's fallen. So back, let me inspect this back. Now this is the index. Back in June 2008 is when the coal industry topped, right? And this indice was at 758, approximately. It's not the exact number, but approximately. This decline, it has had a 98% decline, okay? So the coal industry has had a 98% decline, and it is one of the top industries in the last 3 to 6 months. So there's a lot of junk buying, a lot of buying off the bottom. Let me refresh this. So a 98% decrease in this industry, right? You would think, well, maybe there's a lot of opportunity. So I think that's what's happening, a lot of opportunity seekers. Here's why I'm scratching my head and I'm not going to get involved in this. Yes, you got the golden cross right here. Everything's looking right for a trend change. Here's why I'm just not going to get sucked in, because at the end of the day, I match fundamentals with technicals. And I went and looked at the top 5 stocks in the coal sector, according to Investors Business Daily, based on relative strength and earnings. All 5 of the top ranked stocks in the coal sector still are going to have either negative or declining earnings this year. Only one stock is expected to have increase. Out of the 5, only one stock is expected to have increasing earnings next year. So opportunity seekers, scratching my head, dead cat bounce, you can call it what you want, but to me, it doesn't match up the fundamentals. So I wouldn't get too sucked in, because the index has already gone from 11 to 48, so it's already quadrupled, and there's really not a lot of fundamentals to back it. And depending on who's president, I can't imagine anyone just being able to turn around this industry based on all the greenhouse emissions and carbon emissions and all those laws that are going to be put in place. I cannot see this industry just roaring back. I could be wrong, but I don't think I am, okay? So, we talked about finances. Let's talk about, I want to go back to a few financials, and we're looking at the weekly chart here. I don't need to look at a 10-year. Let's look at a 3-year. So this is a broker-dealer ETF, iShares. So you had a nice uptrend, right? It's pulling back a little bit, right? You had this weekly upside reversal. So the financials, the IAI, right? The broker-dealers, the IAT, the banks, the regional banks. It doesn't near look as pretty. But look at this massive volume. Someone huge stepped in and bought this ETF, and it wasn't me or you. It was institutions to really push these stocks up. So someone's really betting on interest rates based on these spikes. IYG. So I really think that if, I've talked about emerging markets for a while, so this is the financial services sector, so your Morgan Lynch's of the world and all that stuff, and you can see it's kind of being sold off this week a little bit, but a lot of these that are interest rate sensitive, I think they are going to be your leaders in the next bull market. So it's really, really something to pay attention to. Because I've been really beating the emerging markets drum, and now I'm kind of on the U.S. side. I think it's time to beat the financials drum. And I took a stab at IAT last year, and then the market, because I thought it was time, and then the market rolled over again. Let me I don't know why it's doing that. Let me refresh that. So I took a stab at this probably right around here when it looked like it was consolidating, and then the market just rolled over and took it down with it. But it's making higher highs, right, or higher lows, excuse me, and I think it's going to take a stab at the all-time high. So financials, I would be an overweight in financials. I'm really, really looking for opportunities within the financials. Now, I'm still a fan of emerging markets. I still think that if you had one place to put your money, or one place I had to put my money over a long period. Now, it's extremely volatile, but I do believe emerging markets, one sector is going to knock the living socks off of pretty much anything. China right now is really starting to change its trend. I've been looking at Chinese internet stocks, but you got a massive downtrend, almost like a cut in half from 51 to 27, and then it comes up. It busts through, it starts to consolidate, it goes up, probably gonna do another trading range, stair step its way higher. So China is actually looking the strongest right now and is the strongest emerging markets country in the last 3 months. China is extremely, extremely volatile, but I still like emerging markets, and right now Asia is really starting to take the lead over. And earlier this year and last year, it's been South America, the Brazils, the Perus of the world. But China is really, really, China and Hong Kong are really, really starting to lead. So, these are just, it's not a blanket recommendation, right? This is for educational purposes only. Go do your own research, but it's just, there are some charts that I'm starting to notice that are looking interesting for a long-term play. So I hope this was helpful. I hope everybody has a great weekend. Let me know if you have any questions.